Hello, and welcome to the fourth episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa, and we'll be looking at what's currently happening in the markets, try to understand the basic dynamics influencing the markets, and potentially understand the ideas behind trading, that is potential market movements, as well as the key market price levels. So as we proceed, if you have any questions, feel free to raise those questions, and I'll be responding to those questions right away. So before I make any progress, I would like to begin by doing a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So hi Faith, hi Eric, thank you guys, thank you for your responses. Hi Boaz, this is really great. So I would like to begin the session right away. Remember, this is a very quick session that we do on each and every Tuesday at exactly 4 p.m. So I'd like to begin by mentioning that this is a little bit advanced. So if you're a beginner, you've never traded before, you should probably go to the FX Pesa channel, and then you look for the Novice to Pro series. This will help you transition from a beginner to a pro level trader. So at the moment, the chart that we are looking at right now is the monthly chart of gold. So from what we are seeing, you can see the number of consecutive months that gold has been trending downwards. So this is a clear highlight. I'm hoping that everyone can be able to see this. So just to highlight the specific area. So 1, 2, 3, 4, 5, 6, 7. So for 7 straight months, gold has been on a bearish movement. And this is the first time that we are seeing this in recent history. So to be honest, since I was born, gold has never trended downwards every month. And this is the first time we are seeing this. So you can see how the market responded today. Do you remember this is the first day of the month? Very strong bullish momentum in gold, basically indicating that the prices are considered to be very cheap, and expecting at least 1 month of gold moving in the opposite direction, that is moving on the upward side or on the buy side. So if you move down now to a much smaller time frame, which is the 1 hour chart, you'll notice how much gold has been moving. So yesterday it was clearly bearish. Friday last week it was strongly bearish. And this was in correlation with the dollar index, which was basically weakening. So a very strong momentum today, showing strong signs of recovery. So if you look at the bottom here, it was somewhere around 1630. So 1630 seems to be the periodic support for gold as per this moment. So let me remove the highlight. So with gold bouncing strongly from the 1630 price level, you can see the strong acceleration completely undoing yesterday's movement. So after doing this, you'll notice that yesterday's high was broken without any challenges. So this was the high, somewhere around 1645. So after the market broke, went back for a while, retested the area. You can see the small candlestick here on the 15-minute chart before the progression higher. So from the 1 hour chart, you can notice that there's not much of a resistance in this particular market, save for the low that we saw on Thursday last week. So the low that we saw on Thursday last week includes this tail here. So you can already see that the market is facing some resistance. You can see some long tails beginning to form on this particular chart here, indicating that there is a potential rejection of this price level. So around 1655, 1656, seems to be the momentum resistance, but I don't think this is the very resistance that we could see gold changing direction. So as for today, whatever you are seeing on the dollar index is basically movement back down. So from the 1 hour chart, you can tell that for the last 3 days, the dollar index was completely struggling, but eventually moving higher and higher. And I'm talking about Thursday, Friday, followed by Monday, dollar index attempting to recover before pulling back down today. So clearly, if you take the 4 hour chart here, You'll notice the recent movement in the dollar index seems more of a sideways momentum. So if I was to use these lines here and then track the low here and also the high here. So from this particular high and this low and also this other low, you'll notice what has been happening with the dollar index. Acceleration upwards, getting to 114.7, pulls back down, gets to somewhere around 109, and then up, praise here for like 2 weeks before dropping further to 109.3 and then rising to this point before pulling back. So what we are seeing here is basically some sideways kind of momentum. So if I was to use some trend lines here, from this high connecting to this other high and then this other high, then I would assume our line of best fit is somewhere along that line. And also, if I was to combine this low with this other low, then it would indicate a slight bearish momentum in the dollar index, basically indicating that the dollar might be starting to weaken. However, the overall interpretation seems like more or less like a sideways momentum in the dollar index. So with this in mind, take the shorter term movement, which is today's price action, basically indicates that the dollar index is weakening, which has the opposite effect on the major currency pairs as well as gold and oil. So as for silver, you can see the strong sharp momentum upwards. As for gold, same thing happening. So if the dollar index remains weak and continues weakening throughout the session, then we might be looking at higher prices to mark as the targets for the upper side. So there's a key price levels somewhere around 1662, and also these recent high here around 1674. So from the current price level, which seems like a major level to consider, especially if you are a gold trader, then these long tails already are an indication that the gold price could be facing some form of rejection here. So if it manages to reject this price level and change direction, then the obvious trend is to look at yesterday's high. So potentially we'll be looking at gold moving back down to a level around 1645. And if there is a further momentum, then potentially another rally towards the 1662 price level. So key things to consider in gold is that 1662 price level on intraday trading seems like an interesting price level. At the same time, 1645 seems like also interesting price level, considering that the price could pull back and get to yesterday's high, where it seems to be a significant level. So besides this, it's very important that we understand what is happening in the market this week. One thing to notice is that the Reserve Bank of Australia raised interest rates earlier this morning by 25 basis points, and these had a retro to no momentum. We did not see the major spikes that we normally see in other pairs. So you can see the morning momentum here. Australian dollar rallying against the dollar pulling back or basically strengthening, and then out of putting back and forth up until the market strengthened and started moving higher, basically in correlation with the dollar index. So as the dollar weakens, then we are seeing some upwards momentum in AUD/USD. So it doesn't seem at all straightforward momentum towards the upside. So it seems like the market is slowing down as we expect major news to be happening tomorrow. So if you're looking at this from a smaller short-term time frame, you notice like the market is almost entering into some form of consolidation. So more or less like a rising wedge happening in this market on the 15 minutes chart. And this could basically imply that the market is losing in terms of volatility. And if this volatility dies out as we approach the end of the day, then tomorrow might be a kicker. This is when we'll be expecting more volatility, since the Fed is expected to raise interest rates by 75 basis points, and this would take the overall interest rates in the US to 4%. So currently standing at 3.25%, it's significantly high. So if this goes on to 4%, then investors will be expecting the Fed to respect its policy and projections of 5% towards early next year. And this would be an extremely high interest rate that would further strengthen the dollar to address the rising inflation. But at the same time, it would have to weaken other markets, especially the equities markets. So AUD/USD, you can already see the momentum here, not really strong per se. If you look at the swings, they're getting smaller and smaller. So I think the focus now remains on tomorrow's announcements. So with tomorrow's announcement, let's take a quick look at the economic calendar, understand what's happening and see what we'll be expecting tomorrow. So this is it from early in the week. That is on Monday. We started with some weakness in Chinese manufacturing data. This had an influence in oil markets. Remember, China is a big importer of oil, uses this oil for manufacturing. So if manufacturing activity is slowing down, then this tends to have a negative effect on the outlook of oil demand. So this had an effect directly on oil. So as we move down the week, notice that the flash CPI estimate for Eurozone basically spiked to 10.7%. So with inflation rising higher in the Eurozone, this was bad news, especially for the Euro USD. We saw the Euro USD beginning the week moving downwards before attempting to make a recovery today. So clearly from the previous reading, inflation was at 9.9%, and this has moved higher to 10.7%. So you can see the projection since January this year. So from February, the inflation was extremely low, but since then, every consecutive month, we have seen inflation continuously rising in the Eurozone, and this is as a result of one, the war in Ukraine, which has stretched the supply of oil, so energy bills have been going up, and at the same time, housing prices have also been going up, among other core commodities within the CPI basket. So in this case, we're expecting that the Eurozone will be a little bit stronger on the next rate hike in order to control the rising inflation. So we might see a higher than expected rate hike going into the next ECB meeting. So as for now, Euro USD remains weak. So this high inflation is bad for the Eurozone. So if the Fed manages to raise interest rates by a bigger chunk, let's say 75 basis points, then Euro USD might be a good candidate to pair the dollar with. So that being mentioned, if you go back to the charts and then you look at Euro USD and how it has been performing, sorry for all this noise. Let's remove all this noisy content. So what we are seeing here is Thursday, the Euro weakening against the dollar, moving sideways. Sorry, Wednesday. Thursday moving sideways, Monday, some further downside, and then Tuesday we have seen this strong recovery. So the dollar index seems to be a big determinant in the market movements. So whenever the dollar seems to be weakening, all these other assets seem very strong, gaining against the dollar. So today's dollar index weakening basically implies the euro rallying against the dollar. So we are already seeing a very strong movement, though it's beginning to slow down as we approach yesterday's high. So yesterday's high is not very far off. It's somewhere around here. So we are looking at 0.99652 as a potential target. Also, there's a key round number that has been attracting out of market activity, and this is somewhere around 1.0 parity level. So this is where the euro is trading at 1-to-1 against the dollar. So you can see it was broken, acted as a resistance, market went down, attempted to go back up, failed, kept moving this way before dropping further yesterday. So today's upwards momentum might find resistance somewhere around 0.9962. As we approach tomorrow, I will be expecting the Fed to meet. There will also be a Federal Open Market Committee or FOMC meeting. So on this press conference, we could see retail policy statements from the Fed, and these would potentially lead to some further downside. So from the forward chart, let's look at what's happening with the euro. Clearly, momentum for 2 weeks before pulling back down, and then another momentum rallying for 3 weeks before pulling back down. So you can already see that the market is attempting to go up, but I don't think this has already hit the major support level that we'd be expecting the Euro USD to bounce from. So if you look at the lower trend right here, we have been experiencing a series of upwards momentum, and this is based on 3 previous lows. So we have the first low here. We also have another low that was happening around this area here, and also another low happening along this area here. So clearly, this downwards momentum didn't quite meet the market structure. So didn't quite hit the expected area. That this is around the lower trend line. So along this structure, we could see the market continuing the same kind of structure. So potentially, what I would be expecting is the market to hit resistance yesterday's high, and once it does this, then potentially dropping further down towards the lower trend line. So our potential target, especially tomorrow, might be somewhere around this area here. And this is a price level of around 0.98. So 0.98 might be a very nice target for the Euro USD trading, especially as we approach the news tomorrow. So on other news, I think one of the most dominating news in the market is that President Joe Biden threatened on Monday, this is towards midnight, that he will pursue higher taxes on oil company profits if industry giants do not work to cut gas prices. So what was actually happening is that a majority of the companies in the energy sector made some big profits. I'm talking about the top 6 companies making over $100 billion worth of profit when the economy is already suffering from high inflation, and also we are experiencing high interest rates. And these did not augur well with President Biden, especially considering that we are headed, or rather not we, but the Americans are headed for the midterm elections in a week's time. So with this happening, he basically mentioned that if these companies don't use those profits to reinvest and expand production and refinery processes, then in this case, we'll be looking to raise taxes on them in order to punish them. So this threat, though subliminal, it had a lot of weight with it. So one of the key things, it basically implies that the Biden administration is not very confident of getting oil supplies at lower prices. So by forcing the shale companies to basically expand their production, basically means that the administration is not very confident on where they will get oil supply at low prices. And this was very positive for the oil markets, since if the supply side is squeezed, that is, oil is rare, then in this case, we'll be seeing oil prices moving towards the upper direction. So looking at the WTI, or the West Texas Intermediate, commonly regarded as the US crude oil, you can already see the strong momentum upwards, reversing yesterday's movement and also breaking Friday's high. And now it seems strongly moving towards Wednesday, last week's high. So last week's high is just right here around 89.273. So the strong oil momentum seems headed there. So if you're still in the trade, there's that potential that the price could eventually get here. So as we proceed today, you should know that this is an educational session. It's not designed to give you trading ideas. It's basically designed to give you this information, help you break down the content happening in the markets, and then you make an informed decision. So trading in the financial markets carries risks. So you should always practice risk management and be very careful when you're trading. So that being mentioned, I'll be taking questions. So if you have any questions arising from the presentation, feel free to type those questions in the live chat section, and I'll be responding to those questions right away. So I'm seeing a lot of correspondence here, a lot of attendance. Hi Boniface, Brandon, hi Caleb, Johnny, hi Nathan, hi Kaya, Pilo. Thank you guys for joining the session. If you have any questions or markets you want us to focus on, or some developing concepts in the markets, then you can always raise that in the live comment section, and I'll be responding to that right away. So moving on another point, we have seen the strong bounce in oil happening here. So as we all know, oil is affected by two things, demand and supply. So by focusing on the supply side, we already know the decisions by the OPEC, or basically the big cartel controlling oil supply. So with them cutting oil output, it basically means that they are looking at strong oil prices. So when you look at the demand side, there are also rumors in China that the Chinese government is looking to ease the COVID-19 restrictions in order to spur economic activity. So in this case, if they remove the COVID-19 restrictions, then there could be higher demand from China, and these would drive oil prices higher. So that's one key thing to consider. So the other key thing to consider, especially for the US crude oil, is that the Saudi Minister of Energy basically mentioned last week that the US has been manipulating oil prices by basically using its strategic oil reserves. And this is something that has been happening since March. So President Biden has been drawing more and more oil from the strategic oil reserve, but at the same time, the strategic oil reserve does not contain unlimited oil. So at some point, it will run out and they will be forced to buy more oil from the market. So potential demand for oil basically implies higher prices. So potentially, if they start restocking oil, then we could see oil demand spike higher, and this could drive prices higher. So from what we are seeing over the last couple of months, and when I mention couple of months, you can see what has been happening. So for 4 consecutive months, the prices of oil were going down. So let's look at March here. We had a very high price on March at $126.4 per barrel. Then prices dropped back, kept going up, peaked again somewhere around this level, 120, 121. And since then, we saw 4 consecutive months of oil prices going back down. So this was as a result of US tapping more strategic oil reserves, pushing prices down, and also the economic slowdown, which basically led to this movement. However, it seems to have reversed. In the last 1 month, the closing candlestick was strongly bullish, and now this month, we're just 1 day into the month, and already oil prices are rallying. So we could see the bullish momentum continue. So remember, if you look at March of 2020, when the pandemic began, oil prices were at an extremely low level. So we saw this happening at around $8 per barrel. But since then, we have been engaged in a very strong bullish momentum. So 2020 ended on a high, 2021 on a high. This year, you can see first half, that is the first 6 months, market was moving up before pulling back down in June, and then drop, and then last month moving up. And now we are left with only 2 months. There's that potential that we could see the market pushing a little bit higher. So currently at a price level of $89.273, there is that potential that we'll be seeing oil prices move towards previous highs. So the most direct target of the short run, especially for intraday traders, could be the high that we saw last week of 89.273. And at the same time, we could potentially see even higher prices going forward. So with that in mind, let's look at the economic calendar yet again. So from the calendar, just want to highlight the news that we're expecting for the week. One is tomorrow's news. This will be employment data for New Zealand. So the jobs market is a key factor, especially when the Reserve Bank of New Zealand is making decisions. So an employment rate might cause a lot of volatility in New Zealand pairs. So besides these, the key highlight for the day will be the interest rates. So this will be happening at 9 p.m. So we'll be focusing on the FOMC press statement. Federal funds rate, potential interest rate hike of 75 basis points, getting us to 4%. There's also that potential that the Fed could slow down and do a 50 basis points hike. So if it's a 50 basis point hike, it will basically imply that the Fed is slowing down, and this would be negative for the dollar, but positive for equities. So the press conference, I think, will be the most important thing happening later on at 9:30 p.m. So the press conference is where they will be basically discussing economic policy. There will be questions and answers, and this might lead to even more volatility in USD pairs. So besides this, going into Thursday, we'll be focusing on the CPI, or the Consumer Price Index. This will be for the Switzerland, so it will be affecting the Swiss currency or the Swiss franc. This will be happening at 10:30 a.m. on Thursday, and then later on we'll be focused on the UK interest rates. So this will be a big test for the new Prime Minister, Rishi Sunak. In the previous meeting, they hiked rates to 2.48%, and in this case, we expect these rates to move higher to 3%. So UK rates are very important, especially considering the recent challenges with the bonds market. So if the interest rates keep on rising, then we might be expecting the pound to start recovering against the dollar, among other pairs. So we could see a lot of volatility happening with the pound. So that being mentioned, besides these, moving towards the end of the week, economic news will start to slow down. There will be ISM services PMI at 5 p.m. on Thursday, and then towards the end of the week, we'll be having the NFP. So jobs data is also very important, especially as a key data input for the Fed when it's making its decisions. So when the Federal Open Market Committee meets and they're making votes, they base this on the data that they get from the economy. So if the employment or the jobs market seems largely affected, then the Fed could change its policy. It could change its tactics. But if the unemployment rate remains the same level or even reduces, then the Fed will have more room to make even more hikes. So these could spike volatility further as we approach the end of the week. Same case applies to Canada, where we'll be focusing still on the jobs data. So unemployment rate in Canada was last at 5.2% last month. So in this case, we're expecting this to move to 5.3%, basically meaning that the job market is weakening. And also for US, the previous unemployment rate was 3.5%, and we expect this to weaken further to 3.6%. So if there's a big spike in unemployment rate and goes to, let's say, 4%, then this would potentially induce the Fed to change the direction of policy. However, if job remains strong, let's say we see a 3.5% or even lower, then we'll be expecting some further rate hike, and this would strengthen the dollar further. So besides what we are seeing in the economic calendar, there's also geopolitical developments. Basically, the Russian Federation basically accused the UK Navy of bombing the Nord Stream pipelines. So we saw this happening about 6 weeks ago. And when this happened, we didn't know who caused it. But now, with these allegations, we expect the geopolitical sector to get even more heated. And when this heat happens in the markets, then it basically forces investors to go for safe haven assets. So among the safe haven assets that are critical in the markets today, we have Bitcoin, we have US oil, and the best performing asset for the year has been the US dollar. So we'll be focusing on the US dollar and how it strengthens. So dollar index will be a key indicator of how the market responds. So today seems weakening, but then besides the dollar index, we will be looking at gold. So just quick look at gold, already showing strong momentum upwards. And at the same time, we'll be looking at Bitcoin. So clearly, Bitcoin has been moving in a sideways manner, forming some form of triangle. So if you've been paying attention, you'll know that it has been breaking its bond against US equities. So if you look at the S&P 500 and how it has been performing over the last couple of days, and then you compare with Bitcoin, you notice that there's some level of decoupling happening. So if this correlation dies out, then Bitcoin could start behaving in its own way, which is independent of the S&P 500. So as for equities, you can see the strong, sharp momentum upwards, which seems to be dying out, or I would say choking out. So volatility was high about 2 or 3 days ago, but now, yes, there's still sharp momentum upwards, but the swings are getting smaller, basically implying that we are getting into some kind of a rising wedge. So at some point, we expect this volatility to die out. So potentially, what we are looking at here, and this is the S&P 500, clearly, it's a market that has already broken the upper trend line, seems strong, moving upwards, but at the same point, we know that it could easily go back down as a result of the Fed rate hike tomorrow, especially if it's 75 basis points or even 1%. So this is a potential that could happen in the market tomorrow. But at the same time, we know that there's a major resistance over here. So this is a high that we last saw in September. So if the Fed manages to do something smaller than expected, then the S&P 500 could rally all the way up to a level around 41.29 or rather 41.30. So 41.30 could be a nice target, but then if there's a strong rate hike in the dollar strength, then the market could go crashing all the way back down. So that's it for today. I'll be looking at any questions that you have, respond to them as we approach the end of the session. So good question. I'll be responding to only one question that I have so far. So this is from the clerk, Lincoln. Hello, please, what is the liquidity or liquidity graph in simple terms? So I don't know if I have an example for this on the charts, but let me try and see if we can get one. So let's say, I don't know how we can frame this. So this is the market for UK oil or Brent oil. And as you can see, for the last couple of weeks, this market has been moving upwards. So this has been the general direction of oil. So let's say you had this low here, combined with this, and you had your trend line here. And then also the market is moving upwards. We have some form of resistance here, basically forming a very strong bullish channel, and this is on the 1 hour chart. So in this case, the market moves from the upper trend line goes down according to structure, gets to the lower trend line. And once it gets to the lower trend line, you can see the strong bounce, very strong candlesticks indicating that the market has bounced and is now headed higher. So what happens is that when the market goes up and it fails to move even higher because of liquidity, then it goes back down for liquidity. So a lot of guys, especially retail, that had bought in this bounce here, had probably set their stop losses somewhere below this area here. So market goes back down, grabs this liquidity, liquidates basically all these trades that were held here. So if you had a buy trade, you have a sell trade here. So if you are selling, then these guys are buying here. So market goes back down, grabs the liquidity here, and then drives all the way back up. So this can easily be described as a liquidity grab, where the market went back down, grabbed the liquidity, and rallied all the way back up. So as a retail trader, you might be potentially disappointed that your stop loss was hit and then the market moves originally in the same direction. So that's why it's very important to react to price movements. So if you had a buy trade here, market goes back down and goes up and changes direction, you should probably exit, wait to confirm whether there is a liquidity grab, and if it actually happens, then it marks an even stronger signal to trade in the same direction. So this marks the end of the presentation today. Thank you very much, guys. Thank you for your time. I hope to see you on the next session. So which pair to trade tomorrow after the news? I think it's a wait and see kind of scenario. So you wait, see what happens, and then react to how the market responds to the news.